In the course of time, mountains are worn down to plains, and grand canyons are carved out of rock. The clock is always running, which can be viewed as a blessing or a curse. But time is one of Bitcoin's most important factors. While we tend to fixate on the moment, Bitcoin is adding the next block. 2026 is more than halfway over, and as the time chain grows, we are ever closer to that next halving, the next bull run, and the next all-time high.
This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Guten Tag, buenos dias, morgen, and welcome to episode 276 of the Bitcoin Bulletin Podcast. As usual, I am your host, Chris, and I am coming to you from the Bitcoin Bulletin Studios on Florida's absolutely gorgeous, if not a little warm, Space Coast. Obviously, summer is in full swing, and 2026 is already more than half over. As I alluded in the intro, time flies, and just like the relentless march of time, Bitcoin continues adding blocks. Without permission, unstoppable. That also means that there is a light at the end of the tunnel. That even if we haven't had the actual bottom yet, that Bitcoin is another day closer to the end of this bear market and another day closer to that next all-time high. Speaking of time marching on, we are rapidly closing in on 5 full years of the Bitcoin Bulletin Podcast. And of course, 5 years of steadily accumulating Satoshis, $20 a week. So that's actually really exciting. Hopefully you have something extra special in store for those milestones. And as usual, we do have a lot of news and things that I want to get into today. But before we begin, let's take a minute to take our customary look at Bitcoin's vital statistics. At the time of this recording, we are sitting at a block height of 957,227, and Bitcoin is ringing in at a US dollar value of $62,070 US dollars. And as a sidebar, I keep hearing people say that for the first time, Bitcoin is worth less than it was 5 years ago, which I haven't seen to be true. 5 years ago, pretty much to the day, we made, well, not quite to the day, but 5 years ago this month, we made our very first Bitcoin DCA Wednesday purchase when Bitcoin was priced at $39,716.40. Obviously, that is significantly cheaper than what Bitcoin is at right now. Cheaper than the 58,000 low we've seen so far. And 4 years ago, during Bitcoin's last bear market, we made our purchase almost exactly to the day on July 6th of 2022 at just $20,563.58, almost 3x cheaper than Bitcoin's current price. So just a little perspective there. As far as this week is concerned, despite the fact that a lot of the mainstream media is leading off their Bitcoin headlines with Bitcoin crashes in response to whatever cause they want to assign to it, Bitcoin's price at just a little above $62,000 is more than $1,000, closing in on, $1,400 cheaper than it was last Wednesday when we purchased around the $60,000 mark. So again, all things in perspective. While people might be saying that Bitcoin crashed from its rally above $64,000 a few days ago, we're still doing pretty good. Bitcoin has been nowhere near as volatile as it often is, for example. So Bitcoin's current price means that when we convert our fiat into Satoshis a little later, every $1 that we convert into Bitcoin will buy you 1,611 sats per dollar. Obviously a little fewer than we got last DCA Wednesday because Bitcoin's more expensive today than it was last Wednesday. Bitcoin's current price means its market cap has increased a little bit as well over last Wednesday. Bitcoin's current market cap is 1.24 trillion US dollars versus 1.22 trillion the last two DCA Wednesdays. Nowhere near, the $2 trillion market cap we had at the peak, But as I've mentioned a couple times now, wouldn't it be something if the big takeaway from this cycle was that this was the last time Bitcoin was ever below a market cap of $1 trillion? I'm keeping an eye on that. Maybe we have another big leg down because, if history rhymes, the cycle won't end until later this summer or early fall, around maybe October, if the cycle really rhymes. And if that's the case, who knows? But something I'm keeping an eye on in the back of my mind would be pretty amazing if we never see a market cap below $1 trillion again. That would mean, regardless of what the price action of Bitcoin is doing, it is hanging in there as, one of the largest financial assets in the world. Certainly a respectable one at a market cap of more than $1 trillion. For those of you who still value your wealth in what is currently the largest asset by market cap, those shiny yellow rocks, it will cost you a little more gold to purchase your Bitcoin this week. 14.7 ounces of gold, to be precise. And that is because, even though gold had a heck of a rally going up from, around, what was it, $1,800 an ounce before it peaked over $5,000 an ounce. It's pulled back a bit now around the $4,000 an ounce mark. But, gold had a rally just like pretty much everything did when inflation kicked in and we saw the price of eggs triple and the price of plywood quadruple, etc. But if you zoom out, gold continues to trend to zero in Bitcoin terms. And if you're holding gold and you're thinking about purchasing Bitcoin, maybe converting some of your gold into Bitcoin, these bear markets in Bitcoin are your best opportunities to do so. But again, you do you. This is not financial advice. Although it should be, right? For those of you who value your wealth in pizza, today one Bitcoin will purchase you 3,471 large pepperoni pizzas from Papa John's, a fun metric we follow every week, kind of a nod to that first Bitcoin pizza day when Laszlo Hanya made that first real-world Bitcoin purchase, buying 2 Papa John's pizzas for that staggering 10,000 Bitcoin. So certainly a lot more pizza than Laszlo purchased, and to put that in a little bit more perspective, that works out to a pizza every day for more than 9.5 years. That metric that has been my favorite, Bitcoin's 24-hour average transaction rate, well, the network is currently settling an incredible 7.39 on-chain transactions per second on average. That is up from 6.89 transactions per second last week, so still really, really impressive on-chain activity. And again, that does not include all those Lightning transactions. I've often postulated in the history of this podcast, many, many, many times, that in the not too distant future, we won't really be using Bitcoin on chain. Only governments or banks or maybe whales moving, large portions of their stack might make an on-chain transaction. But for our day-to-day purchases, much like you already do, if you go to Steak and Shake to buy a steak burger and tallow fries, you pay for that meal using Lightning. Which is incredible for so many reasons, but those transactions don't figure into that 7.39 transactions per second on chain, which means we are seeing absolute robust use of Bitcoin as its intended purpose. So that is really cool. And speaking of all of that activity, the mempools, well, they're telling an interesting story. Clark Moody, they run a slightly more traditional mempool. Well, they run an actual traditional mempool. A more spam-resistant mempool with the smaller cache settings, but also without accepting transactions that include a miner fee of less than 1 sat per VByte, which had traditionally been the standard. Well, they're showing an increase of about 2,500 transactions over last week with mempool.space and their much more liberal mempool that includes all those sub-sat per VByte transactions, which are typically those spam transactions. Well, they saw a decline of about 4,000 transactions over last week. So make of that what you will. Despite all of that robust on-chain activity, however, it is still incredibly cheap to use Bitcoin as money. Depending on where you look, for example, Clark Moody's dashboard, their fee estimator is saying that a high priority transaction that you need to guarantee is mined in the very next block only need include a fee of just 2 sats per VByte. That is obviously double their minimum 1 sat per VByte to be included in their mempool. But when you put that into US dollar terms, taking into account the average transaction size, the data size of the average Bitcoin transaction, and you multiply that by 2 sats per VByte and take into account the current US dollar price of Bitcoin, That means that transaction, that high priority transaction, need to only include a fee of just 14 cents in US dollar terms. Quite astounding when you consider how expensive it is to send a wire, or, even how expensive Visa is to use. Now, we don't see that here in the United States, because when you go pay for something with your debit card, the merchant eats the fee, but the fee is certainly more than 14 cents. Usually it's 25 or 35 cents just to swipe the card, and then 2.5 or 3% of the total transaction volume. And even though it looks like the merchant is paying that, mark my words, the price that the merchants are setting their goods and services takes all of that into account. I mean, they need to make a profit. So just like your taxes, just like sales taxes, every fee is ultimately paid by the consumer. And then, of course, if you try and wire US dollars around the world, not only is it going to take a week or so for that transaction to settle, it's going to cost you vastly more than 14 cents. Mempool.space, their fee estimator, is also saying 2 sats per VByte will get you mined in the next block. And they're saying that a no priority transaction will eventually be mined at just 0.2 sats per VByte. And that is what a lot of those spam transactions are sitting in the mempool at. But they're getting mined. Looking back at the last couple blocks, we had a little bit of a slowdown. It took like 18 minutes, I think, for the second to last block to come in. So the lowest fee in those last couple blocks was 1.89 and 2.58 sats per VByte. But scrolling back, we see a couple of blocks that mine transactions as low as 0.28 sats per VByte. Again, depending what time you're listening to this podcast and what time you need to make an on-chain transaction, make sure you have the latest data before you try and roll your own transaction. But by all means, don't pay that default mining fee if you're moving, your Bitcoin from an exchange. I looked at moving some Bitcoin to my hardware wallet the other night, and even Cash App, which has better fees than some other exchanges, the other high priority transaction was over $7. And so, of course, I chose the no priority transaction, and they sent it for free, which was a lot better. But a lot of wallets will not let you set your own fee. They'll just let you set high or low priority, and then they figure it out. But if you're using a wallet that will let you set your fee, again, make sure you have up-to-date data so you don't end up having a transaction not get mined as fast as you need it. If it's a priority transaction, if you're just moving Bitcoin to your own cold storage and you don't really care if it's mined in the next block or if it's mined at some time over the next night, then by all means, set as low a transaction as you can. A low of transaction fee, that is, as you can. We are currently just 373 blocks away from the next Bitcoin mining difficulty adjustment. Bitcoin adjusts mining difficulty every 2016 blocks, which theoretically works out to once every 2 weeks if blocks did come in at that 10-minute average. And it does so with a goal of keeping blocks coming in at an average of once every 10 minutes. And in the next 3 days or so, about 3 days, 373 blocks, we're actually looking at another decent difficulty decrease. Again, different websites, different services use different estimation algorithms to forecast what it's going to look like. So depending where you're getting that data, we're looking at a decrease of anywhere between 2.02% to as much as 3.5%. And that is because blocks are currently coming in slower than that once every 10-minute average that Bitcoin aims for. In fact, they're coming in once every 10 minutes and 22 seconds. So hence the decrease, make it a little easier to mine Bitcoin, to speed them up, speed those blocks up so they're coming in closer to once every 10 minutes. And it is estimated that the amount of hash rate securing the network is 951.4 exahash. So the estimate is down a little bit of hash rate pulled off, likely because it's so hot that in many places, some of those miners are shutting their miners down with those demand response agreements. And it's likely that when the price of Bitcoin is low, that they're simply turning off less profitable miners and relying on their more efficient, more profitable miners. But again, to put that hash rate of 951.4 exahash into perspective, when we did our very first episode of the Bitcoin Bulletin Podcast, network hash rate, the estimates we looked at were between 85 and 90 exahash. So again, we've seen a more than 10x increase overall in network security in the just under 5 years that we've been doing this podcast. So even though we get those pullbacks from time to time, just like the price of Bitcoin has its ups and downs, when you zoom out, overall, network security is increasing, that number going up and to the right just like the price of Bitcoin, when you zoom out, goes up and to the right. All right, on to the news, which once again, the news is the price and the price is the news. Last week we were talking about the 58K gang briefly reliving their glory. Today everyone is talking about $62,000 Bitcoin as if the price keeps tanking. But as we already mentioned in the stats, Bitcoin's actually more expensive. If you just zoom out on the week-over-week basis, which we're forced to do on a weekly podcast, that the price of Bitcoin has actually been trending up ever since we went down to as low as 58K. Remember, I've often said that, I wouldn't assume that the bottom is in until later this year if history were to continue to rhyme with past cycles. But even if that is the case, with a price about 50% off of Bitcoin's all-time high, we have the chance to purchase at prices that, they'll have our no-coiner friends and family calling us lucky once again sooner rather than later, just like they were calling us lucky when Bitcoin was over 100,000. Lucky you got to buy under 100. Imagine what they'll say when Bitcoin sets a new all-time high or goes on to 200,000 or 500,000 or a million, and they didn't take your advice. In fact, they were mocking you for buying Bitcoin at $62,000, 50% off of its all-time high. On another amusing note, I've often talked about how this cycle has reminded me of 2017 or at times of 2021. And Bitcoin Bulletin posted something on X last week that really brought me back to November of 2017. He posted on X, "Please don't start with this. Remember the it's over 9,000 days? It kept happening over and over again." And he's referring to all those Vegeta memes. If you remember, back in November of 2017, when Bitcoin passed 9,000 for the first time, they had the people celebrating with those Dragon Balls Vegeta memes saying, "It's over 9,000. And then, of course, that lasted briefly as Bitcoin shot up to its all-time high of $20,000, about $20,000 that December. But then we had the ensuing bear market, and I often spoke about the similarities of this bear market to that bear market when Bitcoin kept, breaking the $10,000 mark. In this case, it was that $9,000 mark. Every time Bitcoin would go over 9,000, the Vegeta meme would recur, and it happened over and over again. So even more so than we've seen with 58K, but that's what he's referring to here. And in that way, it really was a lot like it was kind of like the original, the OG, the original gangster of the 58K gang memes. So I found that kind of entertaining. But back to this bear market. Jack Mallers posted his take last Thursday on X when he posted, "Bitcoin bear markets are brutal. Ego gets punished. Leverage gets punished. Fraud gets punished. Illusion gets cleared. But if you let them, they make you better. Don't ask Bitcoin to be gentle, ask it to be honest, and then become the type of person who can handle the truth." Absolutely well said. And along those lines, Guy Swan chimed in with his perspective today, posting on X, "Every bear market, bank run, and margin call has a purpose. And if it feels like a kick in the nuts, it's probably because you're finally learning something necessary. Real liberty isn't an easy ride because it's about being responsible for your own choices. Now ask yourself, is the volatility worth it?" So, two great posts that I hope echo what I've been trying to say on this podcast, that remember why you're a Bitcoiner. The whole Bitcoin is hope, Bitcoin is freedom, and as Guy Swan expands that freedom is personal responsibility, as Adam Meister at TechBald on Twitter always says, back when he had his One Bitcoin show, especially, he would open up by saying, personal responsibility is the new counterculture. And that is certainly the case with Bitcoin. But in general, the overall arching theme is that Bitcoin is hope and Bitcoin is freedom from the current fiat slavery that we found ourselves in for the last 50 years. And of course, right now, that hope and that freedom is on sale, 50% or more from the last all-time high, and dramatically cheaper than it will be when we achieve hyper-Bitcoinization. I mean, the previous all-time high of 126,000 is a drop in the bucket. That will look incredibly cheap compared to the many, many all-time highs that Bitcoin goes to set. The that goes along to set on its way to hyper-Bitcoinization, on its way to use as a global reserve currency and a globally used peer-to-peer electronic currency as Satoshi envisioned. Back to what many people consider the bad news, and that is the long-awaited, long-feared happened on Monday. Michael Saylor previously, quote-unquote, tested us with the quote-unquote inoculation sale of 32 Bitcoin, but on Monday, Strategy announced a pretty hefty Bitcoin sale, with Saylor tweeting, "Strategy has sold 3,588 Bitcoin for $216 million to fund dividends on our digital credit securities. As of 7/5/2026, we hodl 843,775 Bitcoin in our BTC reserves and 2.55 billion in our USD reserves." Ironically, though, with him calling the 32 Bitcoin sale an inoculation, he is kind of right, because remember how that 32 Bitcoin sale rocked the markets, and here he sold 3,588 Bitcoin, and Bitcoin's actually up over the weekend. So since its lower prices over the weekend, I guess Bitcoin rallied over the weekend since its lower prices last week. On Friday, we had a little bit of a pump of up to as high as $64,000, but still far above the plummet below 58,000 we saw after that 32 Bitcoin sale. So I guess that's encouraging, even though many, many people are taking it as bad news. All in all, the only thing you should be concerned about is the size of your Bitcoin stack. If companies like MicroStrategy want to sell you some of their Bitcoin, and more importantly, sell it to you on the cheap at just, $60,000 ish, well, then, that's your advantage to be had, I suppose. Samson Mao, who is at Exelon on X, put all of this into perspective on Monday with a rather succinct post tweeting, "Saylor spent some Bitcoin to pay a few bills. Everyone that was complaining that he wasn't using Bitcoin as money can shut up now." And then a crying, laughing emoji. Strategy itself gave us some perspective today as well, with their CEO Phong Le, who took that rollover from Michael Saylor, posting on X, "For the 3 months April 6th to July 6th, 2026, we have increased our Bitcoin holdings 10% to 843,775 Bitcoin and increased our US dollar reserves 13% to 2.55 billion and more than doubled year-to-date Bitcoin yield from 3.7 to 7.8%. So Phong Le with that zoom out perspective. Yes, they sold 3,000 Bitcoin, but they did it to pad their fiat wallet during the bear market, so they can continue paying out dividends on their paper Bitcoin products. But in the grand scheme of things, if you zoom out, Bitcoin, their Bitcoin treasury continues to go up and to the right, with an occasional pullback, just like the price of Bitcoin and just like mining hash rate, as we spoke about in the statistics section. So despite MSTR selling, Bitcoin whales have been buying. Scott Melker, who goes by the Wolf of All Streets, claimed on his show just a few days ago that, quote, 270,000 Bitcoin were accumulated by whales at 59,000. He said that was, quote, the largest single accumulation spike ever recorded on chain. Bigger than the COVID bottom, bigger than the FTX bottom. He went on to add, ETF outflows hit 4.5 billion in June, but the smart money, the whales who sold above 120,000, are now buying back in the largest size ever. He added, "This is something we tend to see at the bottom of markets and not at the top." So I don't normally follow the draw lines on charts kind of guys, but I wholeheartedly agree with the sentiment. If what he's reporting is true, that the whales are stacking, then that certainly is a sign that even if the bottom isn't in, it's got to be close, because the smart money, the quote unquote smart money in Bitcoin, well, they're clearly buying low. They sold high and now they're buying low. As I've repeatedly mentioned, despite the price drop, Bitcoin adoption, and more specifically Bitcoin's network effect, continues to grow. And it's not only growing, but it's compounding. One example of that is the continued normalization of Bitcoin in TradFi markets and the build out of financial products around Bitcoin. it may be something that we want to ignore as noise. We want to stack the underlying asset. I certainly wouldn't encourage people to buy ETFs or other paper Bitcoin products, but it does signal dramatically that Bitcoin is here to stay and that it's even taking over, TradFi. Yesterday, for example, Strike, who it's not TradFi, well, it's hybrid TradFi. It's a Bitcoin native company, but they do offer their more TradFi products. And along those lines, they announced a huge improvement to their Bitcoin-backed loan program. I have never taken a Bitcoin-backed loan, and I wouldn't ever take a Bitcoin-backed loan. And one of the biggest fears that many of us have is because you take a loan out when the price of Bitcoin is high, and then you get liquidated because the price of Bitcoin does. It's inevitable. We have that bear market, and then you end up losing your Bitcoin and still having that tax event that you were trying to avoid by taking out that loan. So yesterday, Strike announced introducing volatility-proof loans. Borrow against your Bitcoin, and the price no longer has a say in what happens to your collateral. No margin calls, no price liquidations. Bitcoin falls 80%, your stack stays yours. Make your payments, keep your Bitcoin, ignore the price. So, Jack, maybe, a product that I still wouldn't necessarily be interested in, but improving upon products as Bitcoin continues to gain influence and normalization in the TradFi system. So pretty cool from a news perspective as far as proving that Bitcoin's network adoption is accelerating. And of course, Jack went into greater detail about the mechanics of this loan product on his podcast Monday night before it actually launched. But the point is that new and improved Bitcoin products are continuing to roll out, and that Strike, in this case, is leading the way in improving upon this. In yet another way that network adoption is growing, this time in the state or nation state level, in New Hampshire, Bitcoin adoption may be taking another step forward. New Hampshire state officials are holding a public hearing on a proposed authorization to purchase up to $100 million to authorize up to $100 million in taxable revenue bonds that would finance the purchase of Bitcoin through a New Hampshire investment trust associated with CleanSpark. Now, it's important to note that this isn't the state of New Hampshire putting Bitcoin on its balance sheet. Rather, it's proposing bond financing structured through the state's Business Finance Authority with repayment tied to the project rather than the taxpayers. If approved, it would be another example of Bitcoin becoming increasingly intertwined with traditional finance, and in this case, the municipal bond market. A trend worth watching as institutional adoption continues to evolve. All right. My overlying thesis, though, remains the same. Nothing has changed. It's important that you remember that. We are Bitcoiners because the current fiat financial system is unfair. We are Bitcoiners because we know that every fiat currency eventually collapses. Voltaire said it, well, he said it best over 300 years ago, when he said paper money eventually returns to its intrinsic value, zero. And in history, we've seen that happen on timelines that we're pretty much approaching. We currently had the pure fiat US dollar, the pure fiat global reserve currency for more than 50 years now, and that's pretty close to the average lifespan of the fiat currency, of the average fiat currency, since they were invented, going back through history. So I'd say it's closer than ever to happening. And it's important to remember that Bitcoin is our life raft. It's great to see network adoption increasing because that means the value of our stack will go up as we get closer to hyper-Bitcoinization. But getting back to our basics, our first principles, that Bitcoin is our permissionless, borderless, absolutely scarce, peer-to-peer currency that frees us of the fiat, the fiat debt slavery world that we currently live in, and does so at the speed of light. That's what we need to remember. Bitcoin is inevitable, but in the meantime, we're still early, so we get to buy in on the cheap. I want to close out this section with a post from retired Top Gun instructor and Bitcoin maxi George Bodine, who posted yesterday, "Good morning. We are all going to have the best time as we exit crypto winter. If this is your first time beneath the cold Bitcoin sun and you are still here, welcome. We're brothers, plebs. For those veterans who kept accumulating in this great value zone around the 200-day moving average, 200-day weekly moving average, you are legend. The things holding Bitcoin down are interest rates and the prediction of where they are going, capital rotation into mega IPOs, and above all else, the CapEx build-out into AI. What I call the next shiny object syndrome. Much of these headwinds are dying off, and more importantly, if you follow on-chain data, you see a clear pattern emerging. Despite all the headwinds, when Bitcoin is in this deep value accumulation zone, plebs are buying. Legend. All right, on to what makes Wednesdays so special. It's made every Wednesday so special for the last 5 years almost, and that is that Wednesdays for us are DCA Wednesdays. What is DCA, you might ask? Well, DCA is short for dollar cost averaging. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. So for example, that very first DCA Wednesday, we set our equal portion at just $20 US, and we chose weekly, of course, for our regular interval. But these are both you do you things. We chose $20 a week because I wanted to show that even if you have very modest means, even if you can only scrape up as little as $20 a week, that it would eventually not only add up fast, but it would go on to put you ahead of where the rest of the world will be one day when we do get to that mass adoption. And I chose weekly because that's a very common interval for people to make their investments. If you live in the fiat world and you put money into your 401k or your savings account or whatever you would traditionally do, you usually do that when you get paid. And in the fiat mining jobs, weekly is a pretty common payment interval. But again, these are both you do you things, but we chose $20 and weekly. Well, of course, that worked out really nice for a weekly podcast. Today will mark our 259th DCA Wednesday. Again, rapidly closing in on that 5-year anniversary of the first Bitcoin Bulletin Podcast, which wasn't a DCA Wednesday. I think it was a weekend update. But 3 days later or so, we had our first DCA Wednesday episode. That was on July 28th, 2021. And of course, we've stacked $20 that Wednesday and $20 every Wednesday since then, which means we've already stacked 258 times, and doing so converted a total of $5,160 US into a Bitcoin stack of 12,004,810 Satoshis. There are 100 million Satoshis in every Bitcoin, so that means we have stacked now 0.12, a little more than 0.12 Bitcoin. And that's the beauty of dollar cost averaging. Even though we only stacked a humble $20 a week, that really added up fast. And ignoring price and just plugging away once a week, we achieved a pretty enviable dollar cost average basis, average cost basis as well. The average price that we purchased our Bitcoin at is just $42,982.77. So even with Bitcoin tanking down to 58K or so, we're still in the green with what a lot of people would consider a pretty enviable price, especially the people that YOLO'd in near the all-time high and their average cost basis is $120,000. Again, those people will be vindicated at the next all-time high. But for us, by not trying to gamble, by not trying to guess, by not trying to buy the bottom, by not trying to just buy the dip, we've achieved a really, really healthy average purchase price. And I know a lot of people are out there saying, but you started 5 years ago, and maybe thinking that they're too late. But plebs, remember this. If all 21 million Bitcoin were to be divided equally among the entire global population, something that's completely impossible because there are people out there with large sums of Bitcoin, but in theory, if that could happen, there would only be a little more than 250,000 Bitcoin per person. The best case scenario when the world tries to adopt Bitcoin en masse will mean we would be scrambling to have just 250,000 Satoshis. I think I said Bitcoin per person. I meant Satoshis per person. So think about that. 250,000 divided by 30,000 Satoshis. And we're going to get a little more than 30,000 Satoshis for our purchase today, which already triggered because it started, our DCA Wednesday purchase should have happened about 10 minutes or so after I started recording. But that means that at current prices, it would take only 8 weeks of stacking to put you in a position where you will have as many Satoshis as the average person would ever hope to be able to dream to accumulate when Bitcoin takes over the world. And so for that reason, and many more, of course, but for that reason alone, I say we are still early. All right, so as I mentioned, our weekly DCA purchase triggered automatically. A while back, we set our automated DCA, we set our DCA to be automated using Strike. Again, I explained that over and over again that the reason we did that is because it was twofold. First, we had been using Cash App, and Cash App increased their fees, which made it untenable for me to stack Bitcoin on. Strike is radically cheaper than Cash App was, but most importantly, Strike would let you stack automatically with 0 fees. Now, Cash App will let you do that too now, but we made our choice and we've stuck with it. And I like Strike. I like Jack Mallers. I like the things he's trying to do. I think he's an honest guy. He's been controversial recently, not Adam Back controversial, not BIP 110 controversial, but with some of the things he's said about paper Bitcoin, that was controversial to many for whatever reason. But I like Jack, so I like the other Jack. I like both Jacks, but I like Jack Dorsey, and I'm happy to make my purchases through his company, especially if he's going to let us make those purchases for free. So our purchase triggered when Bitcoin was a little more expensive than when I started talking. We purchased at $62,398 per Bitcoin. Bitcoin's obviously rebounded from the 60,000, what was it, 60,070 when we first started recording. But nonetheless, a relatively good price. But that meant that our $20 bought us 32,052 Satoshis. So remember, I said at $30,000, I'm sorry, 30,000 Satoshis. If you think you've missed out, if you think you're too late, that it would just be 8 weeks of stacking to catch up to put you in the lead above where the average pleb would ever hope to be. If you're stacking more than $20, you'll get there obviously a lot faster. If you're stacking 8x, $20, you'd get there in just one purchase. So those 32,052 sats increase our total stack now to 12,036,862 Satoshis. Obviously, the price of Bitcoin we purchased at was a little higher than 42,000 something, so it increases that average purchase price. It increased it by a little more than $51, so our average cost basis now is $43,034.47. That's the nature, that's how the cookie crumbles, the nature of the beast. If the price of Bitcoin is more expensive than our average purchase price, that average purchase price is going to go up. But as you can see, the price of Bitcoin has been running on average faster than that average purchase price has been accumulating. When that next bull run kicks off, we retake the previous all-time high and go on to set new all-time highs. Regardless of what our average cost basis has gone up to by then, it will be dramatically cheaper, definitely in that zone where people will be calling us lucky. To put that into further perspective, just when Bitcoin reclaims $100,000, not the all-time high, but just $100,000, our BTC stack will have a US dollar fiat value of $12,036.86. Remember, we've converted just $5,180 into Bitcoin, so not too shabby. When Bitcoin hits 200,000, would be a new all-time high, but something that it will do sooner rather than later. Our humble stack will be worth $24,073.72. Now, of course, for a lot of people, the moon is $1 million. A lot of people think it will get there, myself included. Some people think it will get there sooner rather than later. OG Cypherpunk and Bitcoin OG, in fact, Adam Back, the inventor of proof of work, well, he predicted that by the year 2032, after that halving, one Bitcoin will be worth more than $10 million, for example. But at a humble $1 million, our stack would be worth a whopping $120,368.62. An insane return for just $5,180. It's Nancy Pelosi level style returns. And of course, when Adam Back's prediction comes true, if it happens at 2032 or whenever it happens, our humble stack will be worth more than $1 million. $1,203,686.20. You starting to see how we're still early, plebs? Because at $10 million, That's a lot like in 2017 when Bitcoin hit $1,000 for the first time, and people were writing news articles about those kids that took their college money, or they took their bar mitzvah money, or their Christmas money, or whatever, and they purchased Bitcoin. And if you had purchased just $1,000 worth of Bitcoin when they did, you'd have over $100 million. Well, if and when Bitcoin hits $1 billion, well, that'll be you, because who can forget when Fidelity, when their director of global macro, Jurrien Timmer, predicted that by the year 2038, one Bitcoin will be worth a staggering $1 billion US. When that prediction comes true, our humble stack, without adding another Satoshi, would be worth $120,368,620. Again, remember, we're not going to quit stacking, but that's not too shabby considering that right now we've only converted $5,180 into Bitcoin, and we've done so at just $20 a week. If you've been stacking even more, if $20 a week is nothing to you, well, again, those are you do you things. You're doing even better. And that is really cool. Before I wrap this episode, I want to take a minute to remind you to follow the podcast on X. On X, we are at BTC Bulletin Pod. That's the letters BTC Bulletin, and then pod is in short for podcast. That contact information and more is in the show notes. Wherever you're listening right now, if you just scroll down, you'll see all of that in the show notes. But the main point is, I love nothing more than to hear from fellow Bitcoiners, and particularly listeners to this podcast. And I do reply to every DM I get from our listeners. So if you're on X, please follow us at BTC Bulletin Pod. That helps promote the podcast in the algorithm. Hopefully that will help more people find out about the show, find out about Bitcoin, and find out that they're not too late. But more importantly, send me that DM. Let me know what you think about the podcast. Let me know what you think you would like to hear me talk about on the podcast, for example. If you were not on X, you can always send me a good old-fashioned email. The email is bitcoinbulletin@protonmail.com. That's bitcoinbulletin@protonmail.com. That is not in the show notes because I was trying to avoid spam emails flooding into my email inbox, something I've managed to do, fingers crossed, fairly well so far because I have very little spam. In fact, I have my email open right now. And just like the DMs, I get back to every pleb, every listener that emails me. And it's really, really awesome to hear from you. Most importantly, though, I will see you next week and every week as we keep building for our future. But until then, keep on stacking those sats, you sexy sat stackers.